Welcome back, best ever listeners, to another episode of Passive Investor Tips. I'm your host, Travis Watts. In today's episode, what we're talking about is before you invest another dollar, consider doing this. Disclaimers as always, never financial advice, not telling you or anyone what to do with your money, so please always seek licensed financial advice. With that top of mind, as an investor, we're all looking for the highest return on investment, right? But before I became an investor, I spent about 5 years or actually about 6 years, I guess. I was 15 when I started working. So from 15 till about age 20 when I bought my first property, I had mastered the art of personal finances. And I want to share a few takeaways that could be applicable to you. As it turns out, in many cases, the highest return on investment may not actually come from a traditional investment like stocks or real estate. It might be just taking a look at your own personal finances. So let's go through a few of these examples and I'll explain in more detail. I'll start with a real simple example. For years, we've had these smart Wi-Fi thermostats in our homes. Now, on the packaging, depending on the brand you choose, they all claim to save energy in one form or another. So in our experience, we've saved about 10% on our electric bill. So making a purchase or treating this as an investment of maybe $200 to get a smart thermostat, if you don't have one already, let's just say it saves you 10% monthly on your bill and your electric bill's $300 per month. Well, then that would be a net savings of about $30 per month. So if you run the math of 30 a month, that's a savings of $360 per year and an investment of only $200. So that's 180% return on investment in the first year. So tough to beat that in the traditional finance world. Now we could take this a step further. Let's say that you're going to upgrade your AC unit on your home. And I don't know the cost of these anymore, but let's just say it's $5,000 for an AC unit. And that's going to in turn save you $50 a month on your electric bill. So the math suggests then that's a savings of $600 per year, which is about a 12% return on your capital invested. And what I like about these scenarios, especially this one right here, is it's not really apples to apples, right? A 12% return on an investment or a 12% direct savings on your personal finances, because you are eliminating the risk profile of making a traditional investment, right? We all hope that investment's going to do 12%, but as we experienced investors know, it doesn't always pan out that way. It might be an 8% return or a 10 or even a loss or a 0% return. So you're eliminating the risk of investing and you're getting, I wouldn't call it a guaranteed rate because it's kind of hard to measure these things, but more of a sure thing if you were to take this approach instead. Let's talk about cars real quick. If you're driving a car currently that's older and maybe gets 20 miles per gallon and you drive 10,000 miles per year, like a lot of people do, and let's just say gas is running at $4 a gallon. I have no idea what it is these days, but we'll just go with that number. Then that's $2,000 a year that you're spending on gas. So what if you took $10,000 and you sold your existing vehicle and you added this 10,000 and you bought a newer vehicle that gets 40 miles per gallon? That's going to save you net $1,000 per year, which is the equivalent of about a 10% return. Again, you're eliminating the risk factor. And if you need a new car anyway, or you were looking to upgrade, this could be a true win-win situation. And here's another one a lot of people don't think about is hiring a really good CPA, or in my case, I hired a tax strategist years ago. So my filings went from, let's say I was paying $1,000 a year to do my taxes to now I pay, let's say, $3,000 a year. So a significant increase, which doesn't sound good. Who wants to do that? But the fact is I've learned a lot of tax strategies and how to implement them and apply them to my situation. So I've literally saved tens of thousands of dollars in taxes, even though I pay a little bit more for the help up front. So that's been a very solid return on investment, better than I could get in the traditional world of finances. So those are a few examples of things that do require money and you could treat those as investments, but there's also a whole lot of categories of things you could do that require no money that could cut your costs. For example, our insurance has been going up like crazy here in Florida over the last couple of years. I'm sure it's going up everywhere because of inflation, but Florida seemed to have been hit a little bit harder in that category. I called around because our premiums went up so much, and I ended up saving by switching providers about $700 per year across the board on all of our premiums. And that only required about 1 hour of my time and zero capital out of pocket. Another one that a lot of people don't think about is if you have a mortgage on your house, did you know you can make bi-monthly payments and you can pay it off a lot faster and save tens of thousands of dollars in interest? And what's funny about it, you're not paying any more than you otherwise were going to pay anyway. So instead of, making a payment on the first of say $3,000, you could make a payment on the 15th of $1,500 and then another payment on the first of $1,500. So you're still going to pay $3,000, but you're paying off the principal and the interest faster, which can save you a lot of money and doesn't require additional capital. Last example I'll give you is, and this is one a lot of people get lost and caught up in, and it's going out for entertainment and going out to restaurants and things like that. And listen, I'm not an advocate for don't go out to restaurants, don't go have fun, don't go do entertainment. No, absolutely do, what you want to do. The thing is, could you scale back some of that? And you might be really surprised at how it adds up. I wouldn't be surprised if many people could easily save about $500 a month just by scaling back that category from their personal budget. So something to consider if you're the type of person that likes to spend on activities, entertainment, and restaurants. So the bottom line is, before you make your next investment or before you start investing at all, if you haven't started already, have you considered your personal budget, your personal finances, and things you can do to potentially maximize the return on investment? Once you get those off the table, then it's fair game to go out there and evaluate stocks, bonds, real estate, and all the rest. Hey, listen, if you'd like to brainstorm some more ideas, I've got a lot more content than what's in this particular episode. Always happy to be an open book to you. Reach out, social media, Travis Watts at Passive Investor Tips. Like, share, subscribe, comment, share these episodes with anyone you think could find value. I'm always happy to be a resource and help. You're listening to Passive Investor Tips right here at Best Ever. Appreciate you being here. Till the next episode, have a best ever week, everyone. We'll see you soon.